Hey, good morning, everybody. It's Friday, June 28th, the last market day for the first half of 2019. And I want to remind you again about our free report that we're offering on retirement strategies. And it's easy to get. All you have to do is text the word retirement to 863-285-3815. And then from there, if you also, above this video, you can click the link for the retirement white paper also. So easy to get a hold of. And lastly, before we get on the phone with Dave, if you like what we're doing here, please like and share this video with your friends and family. Glad you joined us today, and look forward to our conversation with Dave here in just a few minutes.
Check in and find out how Wall Street's doing today, one day in advance of the beginning of the G20 starting. Everybody's been waiting on that, see what President Trump and all the foreign leaders do. See if we settle up all our trade disputes in one weekend. Like, that's going to happen, right? Let's check in and see what's going on. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, I got the buttons in the right place today. Do you hear me all right?
I can hear you fine, buddy. Hey, it's we are coming from the house today, working from the home office this morning. Yeah, it's good to be here. Yesterday was kind of a mixed day when we look at the overall. But like I said at the beginning of yesterday, Boeing was really going to weigh heavy on the Dow, and I think that's probably what happened.
Boy, did it. Yeah, the Dow was off by about 10 points, which you kind of say was a nothing day. NASDAQ up considerably. Standard & Poor's up measurably, although 11 points is kind of getting into the faded green ink side. But at the very least, it was an up day. But it just kind of indicates why folks looking at the Dow as being the measure of the market really isn't the best idea, because one stock having a bad day could really screw up the entire index, can't it?
It can. When you're only looking at 30 stocks, it doesn't take much to upset that apple cart.
Yeah.
But the opposite is true too, right? It only takes a couple to do well for the index to do well.
That's absolutely true. Got a couple of government numbers out this morning. One was as expected. The other one wasn't a big disappointment. Anyway, PCE inflation is the consumer expenditures inflation number. It's kind of a new thing to be watching out of the government. And they're showing that it went up last month by about 0.2%. In other words, in the range of the 2% inflation rate that the Fed's been aiming for. That was kind of as expected, I gather, huh?
Yes, sir. It sure was. That's exactly in line with what was expected, that 0.2%. And so, which is, I think, still probably a relatively low number.
Oh, yeah, anytime you can hold inflation in the 2% range ain't half bad. You want some, but you don't want too much. Consumer spending also grew last month. I would think that 0.4% would be a pretty good increase, but the market was kind of expecting a tinge more, I gather, huh?
Yeah, they're expecting just a tad more. I mean, they were expecting 0.5%. It came in at 0.4. Kind of like jobs yesterday or unemployment yesterday. Not a huge difference there. Sometimes that can be just one of the things may have come in just a little bit off, and so, but not really upsetting the markets today.
Understood. We were talking before we went on the air. We'd referenced a columnist that was talking about, hey, the recession is already underway and all of that. What he was saying basically was the notion of this interest rate inversion we're talking about, where the longer-term bond interest yields actually get lower than the short-term yields. It's not a good thing. One of the reasons we watch it as carefully as we do is it is an indicator. This columnist was saying it's been long enough right now that we've had this interest rate inversion on the federal bonds. He thinks we're already in a recession, and my initial reaction was, okay, we're beyond full employment. Inflation is sitting at 2%. The stock market is within a couple of hundred points on the Dow of being at an all-time high. If this is a recession, Phillip, this is the soft landing that every Federal Reserve chairman ever dreamed of, right?
Well, either that or it's just the beginning. And let's don't forget how we had some wild rides in 2008. I mean, I know that was a long time ago now, but, we saw a significant decline in our marketplace within, 2 months. And so don't get complacent and thinking just because somebody says we're in a recession Now, you and I have agreed that we are slowing. Our growth is definitely slowing. But to me, that's not much of an indication. I mean, it could be the start of it, but it's not really saying we're in a recession right now.
Call that question a softball, for lack of a better term, right?
Yeah, that's right.
It doesn't take a whole heck of a lot to scare the bejeebers out of the markets, and anybody that lived through the 2008-2009 crash will say that the markets can turn on a dime and suddenly turn ugly on you. But I do find it interesting having some of this say that we're already into a recession and we're looking at beyond full employment. It, at the very least, for the short term, indicates that yeah, we're overdue for a recession. This doesn't look like one so far, but one never knows. And there are some indications that I've noticed that the bond rates are falling again. Those short-term bond rates were down on the 1.7% yield rate for the 2 and the 5-year bonds, and that's like for a better part of a half a percentage point below the shorter-term bonds. So it's definitely in an inversion mode, and a lot of economists say that's a harbinger of bad things to come.
Well, it is. It's definitely a front runner for those things. And so I would agree that that's something that definitely says we need to be on the lookout, that based on what we're seeing there within the interest rate bond market, that we could see, that is usually the front runner for us to head into a recession or downward market turn. And so I do weigh credence to that, and I think that could be the case. The problem is when does that start to occur? Is that 3 months after the inversion? Is it 6 months after the inversion? Is it a year? And I don't know that anybody actually has that down to a science yet.
Absolutely. I guess the simple way of putting it is it ain't a stop sign, but it certainly is a caution sign on the side of the road, isn't it?
Yeah, it's a big yield sign that people need to pay attention to.
Absolutely. You found another article that that seemed of interest to both of us as well. Listing of the stocks that have done the best for the year so far, and it's got some surprises on it, doesn't it?
Yeah, it does. Now, this is through yesterday. Just to look at the averages, right? The Dow Jones Industrial Average is up 13.7% from January 1st till now. It was down 11.8% in the last quarter of last year. So it gives you kind of they bounced back more than what they lost. S&P 500 is up 16.7% since January. In the fourth quarter, it was down 14%. And the NASDAQ is up 20.7%. Fourth quarter, it was down 17%. So you can see we've rebounded across the board in those major indexes. I thought this was interesting when it looked at kind of the top 10 of the S&P 500. We had Coty Inc. That's the cosmetics company, I believe, up 105% since January 1st.
Crud. That's a lot.
That's a huge amount. Now, it was down 47% the fourth quarter last year. Xerox up 81%. Chipotle Mexican Grill up 68%. Advanced Micro Devices up 67%. So we've seen some pretty good increases this year. If we look at I thought this was good too, the worst performing ones this year.
Yeah.
Nordstrom's was the number one, down 31%. Gap down 30%. Kohl's down 28%. Kraft down 27%. So we've had some big losers.
I tried to find a common thread in there. It sounds like brick and mortar retailers are probably the biggest losers as a category anyway, year to date.
They are mostly, you were right, they're mostly retailers. Of the top 10 losers, there's 1, 2, 3, 4, 5 retailers.
Ouch.
Half of them. Yeah, half of them are retail.
Kind of smart. There are some stocks that are issuing reports for the quarter behind us, and one of them is a big beverage manufacturer that kicked butt, I gather.
They did, man. Constellation Brands, which is a beer and liquor producer, they came in at $2.21 a share. The analysts expected them to come in at $2.04 a share. Revenue also topped the forecast, and they're doing well this morning. They're up a little over 7.5% this morning.
further underscoring the old rule of thumb: when in doubt, drink, right?
Yeah, I guess so.
I'm not sure it's good advice, but it seems to be a common behavior, right?
Yeah. And then next we had Nike. Nike, obviously is a huge company when it comes to sportswear. They did miss for the quarter. They missed by 4 cents a share. Their revenue, though, beat forecast pretty well. Now, what Nike attributes this miss on is they had higher marketing costs and some new product launches, which took some and added some cost to their bottom line. Now, they've kind of been all over the place this morning. When that first came out after the market closed yesterday, they were down about 4%. They bounced back up. They're basically up right now 0.1%. So people have had time to read through stuff and determine what really looks like is going to come ahead this next quarter. And I think Nike's probably on a pretty strong foot with some of their new introductions into the sporting line.
All righty. So we got one miss and one win so far this morning anyway, as far as releases. And again, I would imagine an awful lot of eyes are going to be on the G20 to see if anything interesting happens there. And that's still probably going to be the biggest market moving influence of the day, wouldn't you guess?
I believe so. I think as more and more stuff leaks out of and gets reported from the G20, especially whenever we see Trump and China's premier meet, I think that will be whatever leaks out of that is definitely going to be effective. If not today, because I'm not sure exactly when they're meeting, is definitely going to have an effect on Monday's markets.
Oh, yeah, the weekend futures could be real interesting to watch as things go on. So we're setting the table here. Yesterday, as we mentioned, it was a mixed bag. The Dow being weighed down largely by Boeing was off. Both NASDAQ and the Standard & Poor's were both up by at least modestly decent numbers. 45 minutes before we begin trading this morning, Phillip, where are we heading anyway?
So we got all green across the board today, Dave. The Dow's up 82 points. The S&P 500 is up $6.85. NASDAQ's up 7.25. Gold and silver both up, not by much. We've got gold up to $1,416 an ounce, and we've got silver at $15.31 an ounce. So up a little bit. And then we've got crude oil up from where it closed yesterday by just a tad. It's $59.61 a barrel.
Getting too dang close to 60 for my taste, to tell you the truth. World markets overseas. Maybe the Asian Rim knows something we don't. They were all off this morning at the close. Europe, for the most part, pointing up this morning. Somebody need advice. Are we in a recession? Are we not in a recession? How do you prepare for a recession for your retirement? How do I find you for that advice?
Well, I think one good place people can go is easy to get to is a free report we have on retirement strategies and the things that they need to consider as they head into retirement. And they can do that by texting the word retirement to 863-285-3815. If they follow us on Facebook, they'll also be able to see this post and click on a link that'll take you right to that report. And then for your X-ray review analysis, give us a call at 382-0037 to schedule your free appointment. Follow us on Facebook. We repost every day. And then catch us every weekend for the Statler Financial Radio Show. Noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and streaming on newstalk730am.com. Phillip, thank you much. I wish you a marvelous weekend, and we'll catch you Monday, all right?
Thanks, Dave. You take care. Have a great weekend, too.
You too, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be your...
Hey, guys, again, I want to thank you for joining us today. I hope you had a great week, and I hope you have a great weekend. Again, if you like what we're doing here, please like and share this post with all your friends and family. We'd like to see this get up to 1,000 views a day. So help us out, like and share. Have a great weekend. I look forward to speaking to you on Monday.